Hey traders, Jeff coming to you from Full Throttle Traders. I want to take a few minutes to introduce you to our pro training series. So what you're going to see from Full Throttle Traders, me, is going to see a series of trainings with options, advanced options, pro tips, risk management, and how to maneuver within there. You're also going to see how our members of our room actually, the plays that we're in, the plays that we called over the last week, and then do trade breakdowns like I've been doing mostly in day trades for the past, and I'm going to continue doing those, but I'm going to move into the optionals and diagonals and risk and credits and pro advanced strategies that, just to be frank, most people aren't aware of. They know the basics, but there's an underlying to that can serve you well if you're actually participating in some of those advanced tips. So bear with me. We're going to get over there and get started right away. Okay, so again, these videos are going to be just about somewhere between 7 and 12 minutes or so. They're going to be the best of the best, the meat of what we do inside of Full Throttle Traders as through our members and the professional trading strategies that we actually recommend to our team. So let's take a look as we kind of navigate down. First of all, disclaimer for Full Throttle Traders is that in options trading or stock trading or financial investments involves significant risk. This is no different. This is for educational purposes only, not to be considered financial price or any guarantee of profits thereafter. Also, we want to make sure trading options can result in substantial financial losses. Full Throttle Traders does not guarantee any profits or freedom from losses, okay? We all know that. It's always good to kind of remind yourselves of those situations just as we kind of go through each and every day. Full Throttle Traders Pro Trading Series is a comprehensive program designed to take you from the fundamentals and or from the advanced to option trading. So many of you are brand new to trading. This is going to be extremely beneficial for you. Others of you have a pretty good knowledge on there, so we're going to bring in some pro tips. So it's going to be kind of a good kind of culprit of both of those mixed into here. So if you don't understand certain things, that's fine. Just look for the basics. You'll kind of get that by watching the video again and again. And kindly subscribe to our channel at Full Throttle Traders to gain access to these key benefits as I begin to kind of populate these throughout the course of weeks and months to come. So anyway, looking forward to getting that information out there. And let's take a look here. Again, in addition, we'll review many of our members' trades in the rooms from entry to exit. So I'm going to share with you from time to time the actual trades that we're in, what we're doing, just snapshots of our week-to-week basis, and then trades that we're actually moving through here. I'll start with that here in just a moment. Also, foundational knowledge. This is some of the key benefits. Advanced strategies. That's always good to know. Again, advanced doesn't mean that you're going to make more money. It just means there are some pretty cool ways you may not be aware of and how to leverage yourself just at another level that maybe you have not thought of at this point. And that's employing some of the advanced strategies. Practical application, big one, risk management, right? Expert guidance along the way. And again, this is our weekend review. If you look back in here, just took the 26 here just to give you an insight. Again, you can figure out whatever risks that you want. When I do these risks here, I'm doing about $5,000 per trade. Many of our members do about 100 to 200 to 500 a trade. And this particular one here, the static one, is done just as a static 250 risk per trade. So you can kind of pick whatever it is. But I want you to see the win and loss ratios, what we're doing in here, the moderators calling the plays, what type of play we're in, what instrument we're in, and then what type of play. Anything we do, and I'm going to teach you this along the way, how to set up iron flies, how to set up more, iron condors. Most people are aware of that. They're not as aware of iron flies, the benefits or the detriment of those. Diagonal spreads, it's a big one for us in here. Basically, put credit spreads, bear call credit spreads, and also stocks, and a few others as well. We'll kind of go through there. Let's move into this. So I'm going to talk just a little bit about today, as I set the stage on this, about what a weekly credit spread is. The reason I talk about this is we entered one today. And the one we entered today, we just got out of one with Meta, and it was a bull put credit spread, meaning that we want the prices to go higher by maintaining a lower stop or risk level. Now, we have about a 90% batting average looking at our stats on this, and you'll see that moving forward. And these typically do give you higher batting averages, but what they don't give you is when your risk is penalized, you definitely are going to take bigger losses on these. So when I'm doing $5,000 risk, or doing let's say a level of risk, whatever it is, 1,000, 2,000, 3,000, I'm always doing a bit less when it comes to weekly spreads because these go overnight and the theta decay is strong, and you don't want this coming against you, gapping underneath a bull put spread, because the losses can be more significant. Now, I'm going to break these down through these training series a little bit more, but I'm going to start tonight with a little bit of information about how a weekly spread works. So a weekly spread is an option strategy where you sell one option, you buy another with the same expiration, typically a week out. Now, I love Mondays and Tuesdays and Wednesdays for Friday expiration, but today I actually took one for next Friday. And so I stayed between 3 days out, 2 to 3 days out, to about 9 days out. And that brings in enough theta decay early on where I can capitalize off big theta decay if I'm seasonally right about the stock, at least in the short term, right? But if you're wrong, then the theta works against you. Also be a negative theta on there. So typically a week out, but different strike prices create a net credit. It profits from time decay and limited price movement. The risk and reward are predefined. And when I say limited price movement, they can go sideways and you get full profit. But ideally, if you're in a put spread, a bull put spread, you do want prices to go higher. If you're in a bear call spread, you do want prices to go lower, but it doesn't have to. It can stay the same or even come in a little bit against your strike, and you still can make the money. These can be potentially 100% profits, even if they move against you a bit. So again, in time, I'll break these down a little bit more in detail. So what are your risks with this? Well, pretty simple. The risk of a credit spread is the difference between the strikes sold and also the strikes that are purchased or the strikes that are bought in here, and the width of the spread minus the premium or credit received. This represents your maximum potential loss if the trade moves against you and both options are exercised. For example, in a 5-wide spread with $1 credit, your maximum risk is $4 per share. So if I were long here, let's say Meta right in here, and it came against here tomorrow, gap down here, I'm at risk of losing $400 per one contract. And I'm at also risk of, because I'm close to expiration on the options, of assignments on the short leg. So you want to be aware of that. And that's why you want to keep that risk small. So let's say you have 10 contracts of this. Well, ultimately you have $5,000 exposure with $1 credit. You potentially have a 10 contract would be $4,000 exposure if it closed below the short leg. Now, typically we're further out of the money in these, but you can't get away from these stuff. I saw a stock today gapping down 75%. It wasn't even an earnings play. It just wasn't a buyout or anything like that. So things like that happen in the market. So you never want to have the black swan event working against you when it comes to spread because of the detriments that go along with assignments and things like that. Keep them small. We trade them more abundantly, so we make them up in volume. We don't make them up in per trade. So just keep that in mind. Again, that's kind of just one where I want to start you at with this. But again, as we go through this, I'll dig these in a little deeper. We're in a couple credit spreads right now. So as they materialize and begin to manifest themselves through profits, hopefully, I'll share those with you as we go forward. So again, some of the tradings here are going to be stocks, they're going to be spreads, they're going to be options single, they're going to be looking at the long leg, the short leg, some of the options you can do with the long leg and short leg to basically try to get yourself back in positive theta. Going in the money in certain diagonals and then out of the money in certain diagonals, rolling the short legs and things like that. So there's just a whole lot of things we can cover. It's endless. I could spend years on here and just probably scratch in here. So I don't want to take it too deep with you. I just want to kind of start with the basics in there and kind of get you going. So again, hopefully this was a good introduction for you, just to kind of learn about our channel, what we do at Full Throttle Traders. We have a lot of members in there that benefit from the education part of this. Not only the YouTube and our private mentorships that we have week in and week out inside of our membership only room, and of course for the YouTube videos as well. So we're an education company, probably first. We are a trading company. We call live trades before they actually happen. Then we educate why we took that trade. What was the desired setup? What was the multiple time frame looking at? And so, like I've done in the past few weeks, I'm going to continue to break down trades from day trades to options to iron flies, to all those things. And there's actually a new play that we're doing on here called the 18th candle. I specifically am not calling that, but one of our moderators is. You're going to learn about playing the 18th candle play as well. And I'll have him do some segments in here as well. So hope this was helpful. Looking forward to it. Be sure to hit subscribe. Email me back if you need a one-on-one, private one-on-one with me. No cost. Just email me. That's fine. Jeff@fullthrottletraders.com. And hopefully we can just kind of begin to take you where you're at here and bring your knowledge up a bit further in here, seeing at some of these trades and how they work, the breakdowns, the profits, the losses. I will show losses in here, right? We have a win section only, and I typically focus on the win trades. But at the end of the day, if I'm a member, I want to see kind of what didn't work as well. So from time to time, I'll show you a great looking trade that failed, and that's why we have stop losses. So I think is real. The thing that we're not going to do, just so you can kind of get an expectancy of what here, I'm not going to show you $50,000 winners there. I know you go different parts of YouTube, people are showing I made 50,000. I saw one guy said he made $1 million this week. He makes about $1 million a week. I have a hard time believing that. Maybe it's true. I'm doubtful. I have skepticism in that. These are real, actual trades that are called and discussed prior to the entry, sometimes minutes, sometimes a day before they actually, but usually within probably 30 minutes or so of the actual entry for our members. So again, the reason why I'm staying away from that is it's great to see the flash, it's great to see the big money, but in reality, is the type of risk for the ones, the slim margin of people that are actually doing that, have the capital and also can maybe afford that risk. Not everybody's in that position. They're also risking $10,000, $20,000 a trade. So although it's great and we get these heart palpitations that we see financial freedom in that, in reality is 99.9% of the people are never going to follow that. They're trading small stocks on volume in here. It's just not a full throttle trade. We're about patterns, pattern recognition, watching where money has been, and we trade off of that. So if that's kind of your gig and you want to kind of trade something that's been going on since 1929, the Great Depression, and how the fear and greed works inside candlesticks from a technical analysis, not based on a delta specifically, although we do trade off deltas, but we don't trade deltas specifically. And a lot of these new traders out there typically do. Nothing wrong with that. I think there's definitely a place for that. But we take the step further by not only bringing the data into, but bringing the technicals and the data and merging those two together. I think this is a better combination of doing things. So hope to see you on the channel. Once again, subscribe to @FullThrottleTraders on YouTube and get ready for our next presentation here the next day or two. See you then.